Let's bring in Moor Insights and Strategy founder and CEO Patrick Moorhead. Pat, good to see you. First, starting with Nvidia, big picture, it's right up there with Apple and Microsoft, market cap size-wise. And to me, this is more of an investor expectation of where the profits are going to be in the quarters ahead. It's interesting to me, one leads with chips, one leads with software, one leads with consumer devices. What's your expectation about where the AI profits are going to come from in the next 3 to 5 years?
Yeah, so first off, we should expect all three of these companies to trade places based on sentiment that is all about future expectations. And like you said, these are three very diversified names, right? And you have to always build the infrastructure. So there's going to be a hardcore chip name out there. There's going to be cloud services for enterprises that are in there. And Microsoft fits the bill, even though they're very well diversified, even in devices. And Apple's really a consumer play with their devices. The only technologies, let's say, that might be missing might be classic enterprise SaaS application. Now, are they going to reach $3 or $4 trillion? Probably not. But companies like Adobe, Salesforce, and SAP, if there's going to be end user action in AI, and there has to be to keep this whole AI economy going, those are some names that could be very interesting.
We already see interest picking up across semiconductors right now. One area that I've got my eye on, though, is smaller cap software, because it's just been having a rough time. Mike Santoli was just talking about, the difference in stocks that are doing particularly well versus those that aren't, even as we see these overall indices moving higher. What kind of catalyst is it going to take for the very smart software companies that are lining up their AI future significantly now to start to get credit in their pricing for that, do you think?
Yeah, so the first thing they need to do, and not everybody is doing this, and I think we've seen Adobe as an example, they need to be very clear on what the AI profit model looks like, right? Some are not charging any more, let's say like a Zoom, and I think they want to make it up in market share, or they'll raise prices later. Other companies like Adobe, Salesforce, it's all about that model, but they need to be very clear what is everyday revenue and profits, and what is directly and distinctly attributable to this new generative AI. And that's what investors need to be looking for. And unfortunately, these small cap software stocks are all not being very clear in what the opportunity is. And when I talk to some of these companies, they say, hey, Pat, we don't know yet. There's a risk there. We don't have a great idea exactly what they are, but that's exactly why they're not being rewarded in the market, because their message is so muddled.
I mean, we're talking about the fundamentals, but we were also just talking to Mike Santoli about the pile-on we've seen in terms of market dynamics and the trades that are working versus the trades that aren't, and the momentum that is spurring. You have all this rebalancing going on today and tomorrow. You've got the XLK, the Technology Select Spider Fund, an expectation that you're going to see $11 billion swapped out of Nvidia into Apple tomorrow as that rebalances as well, at least here in the near term. When we talk about some of the technical dynamics and trading dynamics between some of these stocks, do you expect that we could see some volatility, or some of the investor flows go into some of these less loved areas of the market because of what we've seen up to this point?
Short answer is yes, and it's all about the run-up and the risk that involves. But what I think people should be looking at are these second order, I call them phase two companies, like the HPs of the world, Pure Storage, even Dell Technologies, that are part of this secondary build-out of enterprise AI, right? We saw it first with the hyperscalers, and they were helping the software companies deliver their services. They had their own services. You have those chip companies, but what I think is being under-specced here is the opportunity for this enterprise infrastructure. And along with that, does boost some of these other chip names like Broadcom, like Marvell. But yes, it's all about, investors are looking for picks that haven't caught in the AI wave just yet, or there's a imbalance in the valuations.